Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, let's have a look at the stock market. We'll be looking at the Nasdaq, S&P 500, the Dow Jones, and maybe looking at some of the Russell indices as well. Let's have a look what's going on right now with these markets. The first thing that I do see was what happened with these, let's actually start with the Nasdaq. The Nasdaq here on the short-term picture, let me actually go to a chart with no moving averages here for a minute, so we just see it more clearly. Oh, by the way, guys, if you're trying to read the markets, you're trying to read the charts. The charts, if you're a technical analyst as they call us, which guys, charts give you a bit of a gauge on what's going on, and it's up to us to continue to flow through it. It really does. Now, the really interesting thing that I'm noticing when it comes to the Nasdaq on an absolute long-term picture is this happening through here, which is a big triangle pattern. Now, this triangle pattern is not bullish and it's not bearish. We could actually get a drop to the downside, and that's actually quite bearish. We could actually then start to see, a bit of a free fall on the downside. See, it's like a do or die situation. And what I mean by that is this: is that the scenario and the environment that we're in, I truly believe we're halfway to the top in the markets. I don't believe we're at the top right now in the markets. I believe we're halfway there. So yeah, halfway there. Markets living on a prayer. The government prayer. The printing press prayer. Oh, I tell you, those crypto markets are... People are definitely living on a prayer with those crypto markets right now. Anyway, I hope you listen to me when I come to the crypto markets, guys. Anyway, so looking at this here, it's like we're in a triangle pattern here, and and if we do get a break to the downside, then that actually could be quite bearish to start to see a free fall in the markets. We've seen it so many times where we've got a triangle pattern that looks like this, and it breaks to the downside, and we do start to get a bit of a free fall, a bit of a waterworks out of this. So that's actually a possibility as well too. So, but the really interesting thing that I'm noticing through here as well too is that the possibility is to the upside, and I'm more veering towards a big move coming towards the upside. Now, the reason why I say that is because the environment was still in. Nothing's really happened with taxes yet. No interest rates haven't been going up yet to put a dampening on the markets yet. So all these things are still creating this fire underneath these markets. And even on a short-term basis, when we do get these short-term pullbacks, I see these things being good buying opportunities and for big moves to come. I don't believe we're at the top yet. I believe we're getting very close though. Very close, meaning like as soon as they start to raise interest rates, that's a big clue. That's a big factor, right? Because the whole analogy, it's just a very simple mathematical calculation, right? If we have, let's just say this is interest rates down here, okay, and then we have A for asset prices, housing, and also stock market. So if interest rates are if we have a little diagram through here like that, right? So if interest rates are low, then your asset prices are high. So right now, that's the reason why a lot of the asset prices are really high. Printing press and also low interest rates. When they start to raise interest rates again, guess what? The teeter-totter then starts to flatten out, doesn't it? So, and then if we do see an explosion of interest rates over this decade, when interest rates are high, asset prices are low. So that's the reason why. That's the reason why you'll see in all tops, even in 1929 did this as well too. Through 1929 we had the stock market crash, but guess what? They were raising rates all through 1928, and then the 1929 we had the stock market crash. So this is a big thing, guys, to say, okay, now we're getting close to maybe 6 months out. Generally speaking, what I've seen from reading Ray Dalio stuff, the very first interest rate rise, we're roughly about 12 months from the top. So we're still got a long way because they haven't even started the raise rates yet. They've been talking about, thinking about. When it comes to when it comes to interest rates there, but they haven't done it yet. So I truly believe we're likely to start to see something like this, a breakout, and then we're likely to see another absolute big move to the upside. Yes, we're overvalued and so on and so forth, but a lot of these tech stocks, guys, haven't been doing nothing for a long time. So I believe that this Nasdaq, I believe we're likely to start, I believe we're likely to start to break above 14,200, and then once that happens, I believe we're likely to start to see some movement to the upside. On an absolute short-term basis, guys, you can see that I had my momentum trend line coming to the downside. This momentum trend line here, guys, all it did was just connect the highs of this downward move through here. And then once it actually broke, now we've actually started to change the tune, and now we're actually starting to make a move to the upside. So on the short term, guys, we're getting a bit of a bullish scenario here because we're breaking out of this down. You can see as this market was continuing down, we broke down, hit resistance, and now look, we're actually broken through. So we may get something like that, but this looks like we're on an upward trajectory at least on the short term basis there. Let's have a look at now the S&P 500. S&P 500 sort of the same thing as well too. Or actually not sort of the same thing, but we are definitely getting an environment where we're just very sideways. But this sideways momentum here, guys, this sideways movement that we've been getting for the last sort of month could be getting ready for a move to to have another nice move back to the upside. So if I'm looking at trend lines, there was one through there, and now it's actually broken down. So yeah, on a short-term basis, I'm not really getting anything from that. Let me see if I can move this over a bit here for a minute. Can I just extend this out? I just want to just do this here. Can I just extend it out through there to there? Maybe even from there to there. There we go. I'm just using that there because you can see I'm using this line because it didn't close below here. We bounced off it there, bounced off it, and we didn't close below there. So this is a line that the market has actually had a lot of problems closing below this level through here. So it's a good level to use if we do start to close below it. So we're using that on the short-term basis. Let's actually go back to the 3-month chart here for a minute. And you can see we're just sort of sideways consolidation through here. So this is actually sideways consolidation. We had this move up, now sideways. We're actually developing a bit of time through here. Time meaning just market going sideways for a month. So this actually could be what we call refueling to go for another move to the upside. Move over now through to the Dow Jones, and very similar thing as well too on the Dow Jones. Just going sideways, not much happening. We are you can see really just not much going on through here for the last sort of 1-2 months. Now, the caveat out of the Dow Jones is that we do have a significant level going on through here, a significant support level going on through there. So if we do start to hold him, we start to break below 33,500, then we could actually start to see, maybe at 3 or 4, even 3 or 4%, maybe even 5% move to the downside. So we may get that as well too. So that's the bit of a caveat that I'm seeing when it comes to the stock market. Hope you enjoyed this video there, guys. There's a bit of an update. All in all, even if we do get a little bit of a short-term shake and bake, which is a short-term pullback, I still see that we're likely to see a continue really big move in the market, even though we may get some short-term shake and bake. Hey traders, John Howell here. Thanks for watching my video. For a limited time only, I am giving away free access to my brand new trading course. I've put all my most powerful systems, strategies, and trading techniques that I've learned over the last 15 years and put it in this course, and I'm giving it away for free for a limited time. See, in this brand new Guide to the Markets by the Board trading course, and you can get it when you go to johnsfreegift.com, you're going to learn, firstly, you're going to get access to a brand new training course for 90 minutes, and you're going to learn all the details step by step to my #1 trading system with over a 90% success rate that works on any market and any time frame. You're also going to learn 3 powerful chart reading and trading techniques. You're also going to learn 2 more powerful trading systems, and also you're going to learn 7-figure trading secrets, mindset techniques, and so much more. There's top 13 mistakes you're going to learn, the 10K per month formula, and so much more. No, this is not a get rich quick scheme, but if you are struggling with your trading right now and you need help, then for a limited time, you can get free access to this. So go to johnsfreegift.com right now, or click on the very first link in the description, because for a limited time, I'm giving away. So go to johnsfreegift.com right now and start getting access to this full complete trading course, plus also the free training with my #1 trading system with over 90% success rate. Go to that right now, and I'll see you on the next page.